Yeah, greetings all. This Obina Madabuchi, yeah, your finance coach, Obi1 for short. I'm the managing partner of OMC, Obina Madabuchi and Co., and the initiator of OMC Finance Initiative. Okay, the essence of OMC Finance Initiative is to enlighten our community, both Nigeria and outside the country, on opportunities in the financial markets, both the capital markets in Nigeria and that of, outside Nigeria. It's not necessarily the capital market, the financial market in general. We have the capital market, we have the money market, we also have the emerging markets where we have blockchain technology, crypto being used. And we also have the commodity market. So we have a long chain of markets globally. We've noticed that most entrepreneurs do not have understanding of how they could earn passive income apart from their regular business like restaurants, logistics, real estate, hospitality, and the like. So, but if you're able to enlighten or expand your knowledge, you will understand that okay, apart from this normal active income that you are earning, you can also earn passive income so that you can cope with the inflationary trend in the society. Now, this inflation is not peculiar to Nigeria; it's also affecting countries outside Nigeria, the US, the UK, the Europe, and all over the world. There's inflation. The inflation we could trace it from when we came out of COVID, there was supply shocks all over the world, okay, and high demand as well, and the war, regional geopolitical war going on. This has affected global inflation. But in Nigeria here, apart from being imported because we have partners, trade partners with a lot of countries affected by inflation, and which also we partner, we trade with them. We are not in isolation. So if inflation affects them, it affects us as well. Of course, there's also an endogenous factor within our own society, like the subsidy removal and the floating of exchange rate. So inflation has been an issue for a long time, for some time now in Nigeria. So inflation is when prices of items are going up, persistent increase in price of goods and services. Okay, and inflation is caused by, it could be demand side, it could be supply side. That means that when it's demand side, it means that people are buying, enough cash in circulation, and we call it more money chasing fewer goods. And when it is supply side, it means that there's a lot of infrastructural issue like energy, uh, bad roads, security issue, and a lot. So this affects supply of goods and services. Okay, so that's the supply side factor. A whole lot of things affect inflation. So when we want to tackle inflation, usually we look at the two things. So inflation is just here now, and we are looking at our own is to tell us opportunities, how you could also leverage on the current event and make more money for yourself and for your businesses, so that your business will be sustainable. You keep on, employing people and not retrenching your staff, during this period. Okay, and a multiplier effect is the economy will be robust. Okay, and yeah, there won't be social issues, in our society. There won't be social unrest due to um, you know uh, high food prices, transport prices, rental costs caused by inflation, because it affect our mental health as well. So, how long will inflation persist is a big question that we're asking at OMC, that I am asking as a person. Yeah, inflation February inflation figures are out. February inflation figures are out. What are the reaction? What are the intention? So each month, the authorities, release inflation figures to let us know if prices of goods are increasing, or they are moderate, or they are declining. So we had January figures and February inflation figures are out, and that's why I'm doing this video. So let us know that price of goods are still facts is showing in Nigeria generally that prices of goods are still on the rise. Okay, so that sometimes you may be in a location whereby you know price of things are high, but if you go to another location, they are not high. But this fact has shown that in general, Nigeria everywhere it's going up. So I want to show you the figure. Okay, look at the February inflation figure by National Bureau of Statistics. Okay, so we have the general inflation rate to be 31.7%. That's in Nigeria. The inflation, that means that prices of goods have gone up, have gone higher, you know, by 31.7 percent in, uh, in 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 the month of February. Okay, that's for the period ending February. So price of goods are actually on the rise. So the general inflation rate is 31.7%. The food inflation, which is a major aspect we should also always factor in. The food inflation is at 37.92%. Okay, that means that food is even much more expensive than any other thing in Nigeria based on the facts we have to, at our hand. Okay, so urban and rural inflation. Some people always feel, oh, let me go back to the village. You know, let's look at the figures. In the rural area, inflation is about 29.99%, while in the urban region, that is 3.66%. So things are more expensive in the urban region compared to the rural region. Okay, so it's everywhere, and that's why we are seeing some issues of protest that even in the core northern region, in the core rural area, that things are too much expensive. So that's why I told you at the beginning of this video, inflation is not only too much of cash. It's only when there's kind of supply shortage. Okay, like what this insecurity situation we are having also could affect inflation because people may not be able to go to the farm, you know, to cultivate, to plant, and to do a lot of things, investing and a lot. So it's difficult. They go with fear. So and it's affecting the economy in terms of what we are seeing in terms of inflation. Okay, so we also have what we call core inflation. Now, if you remove the impact of food and impact of energy, on the inflation, that's fuel and that of food. Inflation is still high. You may say, oh, food is the major factor. Every other thing is cheap apart from food and oil. No. Well, medicals, core inflation look at other things apart from food and agricultural produce and energy. Okay, and it's also showing that it's double digits. It's double digits. So that means that prices of like medicals expensive, rentals expensive, transportation is also expensive. You know, other things are actually expensive apart from food and energy. Yeah, core inflation is also double digits. So inflation is at double digits in Nigeria, and what it therefore means as an investor, as a saver, is when you save and you want to invest, one is it's basically you need to ensure that you make a return of average of double digits. Let's say about 31.7% as a return on investment. And if you're running a business, you should make at least double digit return on investment for you to maintain your purchasing power. Because what inflation does is that if you have 1,000 naira, 100 naira before, you are just like having about 70 naira now. Because that 100 naira can buy less, or it's like equivalent to 50 naira before, 70 naira. So it reduces your power to buy anything. So you need to always earn a return above inflation rate. Inflation rate about 31.7%. So you need to look at opportunities in the financial market. You know, I'm not saying you should just run into the financial market or jump into the financial market. You know, financial market is risky. You know, so you need to watch videos, watch podcasts. You know, follow people that understand the market, so that you go there with knowledge. You know, it's in one of my slides anyway, and you invest and have a good portfolio. So I'll tell you what portfolio means later, but those are a good investments, different kind of investments, such that at the end of the year, at the end of the month, you know, you are getting a good return on your investments. Okay, so now what does this mean? Food inflation, I said, is approaching 38%. Food budget is the big issue. Rural inflation is close to 30%. So that means that if you are willing to invest, you know, because there are some companies in the Nigerian stock exchange that they're into foods. They're into food. People must eat. And you know, you have to analyze this, look at their balance sheet, whether they are making profits, you know, from this. So you invest in them, they make profits, they claim on dividend, and the price of their shares will go up. Then you sell their shares, then you make your money back. So don't just eat their food or the flour, you know, or anything that they sell. You have to look at the company that you feel that, you know, are quoted in an active market, and you invest and make your money back from them. So financial market is an edge. It edge against the real world, you know, the real sector. That's what it does. Rural inflation is close to 30%. So everybody's affected, whether urban or rural area, we're all affected. So anywhere you are, you know, you need to manage inflation. So this is a very key part of my slide. Now, let's see. My question is, now, will this inflation, how long will it be? How long are we going to, how long will this inflation persist? You know, now, really, for me, the inflation could stay higher for some time. Why? Because I'm saying that the policy are not aligned, you know, at the two level of policy making. You know, the monetary policy and the fiscal policy are not working in alignment. And I say this because, you know, for inflation to work very fast, for the authorities to really combat inflation very fast. They need to align both the monetary policy and the fiscal policy. Okay, because you know the two policies will be working together. Even the fiscal policy at the federal level must also align with the fiscal policy at the state level, will align with the fiscal policy at the local government level. So there should be what we call policy alignment. So for now, I'm not saying that, and that's why I said that the inflation could stay higher for some time, higher for longer. Fine. But there are some actions being put in place by the authorities to combat inflation. Let me just tell you some of them. One is recent increase in monetary policy rates by the CBN from 18.75% to 22.75% is an attempt to combat the demand side of inflation. So the monetary policy, the central bank controls demand, money supply. So they may feel, oh, there's a lot of money, too much of money in circulation. Where the politicians, the business mogul, the elite, they have a lot of money. Let's increase, or people are getting loans from the banks, from commercial bank. Let's increase the rates so that it's difficult for people to get loan, access credit, so that people, you know, won't be able to buy much. Why the price of the goods will come down. That's monetary policy. So these are short-term measure. So it's just for the main time, those affect your demand. They are short-term measure. Okay. So now some of these things I explained to you, I also give you the opportunities involved. Now, if you are an investor, you should know that banks will be charging you more what? Interest. Interest rate will go up. That means that the profit of the bank will go up. That means that the share price of the banks will also go up. So if you're looking at bank like Zenith Bank, First Bank, UBA. Don't just bank them and let them be charging you. Invest in them too. So you get your money back from them. Okay, you get your money back from them by investing in them. So share price will go up. In fact, as I speak to you, they are the most active stock in the Nigerian Stock Exchange as at the date of this my presentation. Yeah, yeah, which is as at 15th of March 2024. Okay, so this is very key. Why? Because they will make profit from you by charging higher interest. So you also monitor them. So fine, they're charging you more, they're making more profit, invest in them. So the opportunity. So for each policy, you need to look at it to affect the consumer. It's affecting we as consumer. It's affecting me or you and I as consumer, but we're also trying to edge against it. So presidential policy program is another attempt. So like the food we're having palliatives, like in Lagos they're having like some markets where things will be sold at discounts. Those companies producing those foodstuffs, look for them, look for them and invest in them, and their share price will go up. Okay, don't just be at the losing end, gain from them. So but you need to do a lot of research. There are so many of them. Some of them could have other issues, governance issues, operational issues. So that's why you have to do a lot of research. But as I tell you this policy, I'll tell you the opportunities. That's what we are doing at OMC One Finance, telling you the issues happening and how you can leverage on them. However, we are seeing budget deficits being used. Now, budget deficits means that the government want to spend more. The budget for 2024 is about 28.5 trillion. We are hearing different news, whether it's 25 trillion or so, but it's more than 25, it's about 25 trillion and above. Okay, so if we have that being spent, about 28.5 trillion or so, you know, that means money will be spent this year. If money will be spent, people have more money. So you have to analyze the budget and know which sector of the budget are they spending money on. Is it construction? Is it power? Is it education? You know, what analyze the budget. And in other videos, I'll give you, some of this analysis. I've done some analysis in the past if you have been following my WhatsApp and the likes. But of course, maybe I would do a kind of YouTube video like this and send, for more people to understand, so that you can key in into that sector where you could make more money. Okay, so don't just look at the budget. So the budget is telling us that they are spending more money. Now, when they are spending money, that means that more money will be chasing fewer goods. That's the area I said that the monetary policy is not working with the fiscal policy, because the fiscal policy is increasing the interest rates from 18.75% towards 22.75%. So it's reducing the amount of money in circulation, but fiscal policy is pumping more. It's saying that I'll pump more money in circulation. So that's why I said it could be higher for longer. It could be higher for longer. This is a possibility from my own analysis. Okay, so but while we're analyzing what's happening in the economy, yeah, a lot of things that we analyze, we always tell you, oh, the opportunities is bring the issues that comes up so that you can rearrange your portfolio. There are some things you need to sell. Sometimes you have to sell some of your portfolio assets in your portfolio while you buy more assets in your portfolio. Okay, so that's that for that. So you can see budget deficit means we are spending more. However, interest rate hike, central bank being hawkish means that we are reducing the amount of cash. And recently, there's even treasury bill sales by the central bank. That mobs additional cash. From the monetary policy, they are moving cash in circulation. They are doing that. The aim is to combat inflation. The aim is to combat inflation. So treasury bill is an opportunity you can invest in, because since there's a hike in the NPR, the rate in treasury bill could also increase. So you can get more money on fixed income in treasury bill. So opportunities are there, while the issues are also there. Now, apart from fixed income, which I mentioned, you can make money from equity markets. Nigeria equity market is doing well. US equity market is doing fantastic well. Okay, so these are the two markets you can look at. I did a call on Nvidia and Oracle, and from time to time I do analysis both Nigerian market and US market. At least Nigeria and US for now. I've not entered any other market like Chinese, Japan, and like. But those markets, the opportunities there. But at least for now, Nigeria and US. Yeah, Nigeria and US for now. So when I do analysis, you follow me on my WhatsApp, I share, and the two call I've made, the return has been very good. I talked about Nvidia. I spoke so much about Nvidia, and Nvidia in the month of February has given a return of 28.58%. You know, in a month, not in a year. So this one, Oracle, I spoke about Oracle, and they're giving a return of 12.34%. Now, this market, these are risky assets. They are risky. We call them risky assets. You need to be very knowledgeable when you invest in them and know when you sell your investments from them. And sometimes you can invest in them long time, like maybe investing in Microsoft, investing in Google, Alphabet, investing in yeah, Nvidia too. We stay for a long time. Investing in some asset that have very strong fundamental. You can put your money there for a longer period. But notwithstanding, things could happen. Things could happen. A law could come that will affect any of these big companies, you know. So you need to be watchful of investment in a risky asset. So we have risk-free asset and risky asset. Risk-free asset are like fixed deposit, treasury bills, fixed income. While risky asset, they give you more money, but they are risky. That's why they are risky. So you have to have a balanced portfolio. So you could say as inflation is going up, you are making your money back in the financial market. So financial market is an edge against the real market, and you need knowledge to invest or to trade in the financial market. Follow our videos, follow our WhatsApp, follow our Instagram to learn and retain your knowledge and apply your knowledge. Don't just go to the market or you will get your capital lost or bonds. But if you go with knowledge, you have someone advising you or putting you through, you're able to make good return on your investment. So I want to thank you for taking the time to listen to this. Podcast, to this video or slide, to this presentation. Yeah, yeah, in Nigeria. So thank you for your time. You can contact us with the phone number shown on your screen. You can sign up, with the link, around this presentation, and so you get insight or recommendation for us. So we actually try to do a lot of research in risky asset and risk-free assets, and we'll bring them to you. Do your own additional research, then you make your decision. Thank you for listening. Bye for now.